Hello, and welcome to today's webcast, 1099 and 1042S Reporting Your Vendors, Tips for a Successful Filing Season. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
All right, I'm happy to present our speakers today. We have Erin Fennimore and Jill Dymtrow. Both are information reporting and withholding here at Moss Adams. And I will pass it over to Erin to get us started.
Thanks so much, Dustin. Thank you everyone on the line for attending today. We're so happy to have you. I'm just going to go over a quick agenda of what we're going to cover today. First, we're going to focus on all of our payments that are going to U.S. persons and the corresponding that reporting and potential withholding that flows from that. So, your 1099 reporting, which I'm guessing everyone on the phone faces. Then we're going to shift to our non-U.S. payees, so payments that are going to persons who are considered non-U.S. And that's where you get into the really detailed types of withholding and reporting requirements for 1042S purposes. And then last, we're going to go over why everyone cares about this so much, the penalties and the interest and all of those nasty consequences for not complying with these rules. So what we hope you walk away today with, we hope that you will be able to identify payments that are in scope for 1099 and 1042S reporting. We're going to talk about 1099 updates and also a few 1042S updates. We're going to discuss those data elements that are required for reporting. We're really hoping we put you in a position where you are ready to report ahead of time in the most painless way possible. And then we're also hoping that you walk away knowing the difference in terms of what documentation is required from those payment recipients. Is that Form W-9 that pretty much everyone knows about, or is it that nasty Form W-8 that is so extremely complicated? And with that, I'm going to hand it over to Jill, and she's going to go over the U.S. payee reporting requirements.
Thanks, Erin. All right. We're going to talk about, as Erin mentioned, pretty much everybody that is in a trade or business is going to have 1099 reportation. So what exactly is reportable on a Form 1099? I mean, this is kind of your most basic, most common reporting type, information reporting type, but so it seems kind of deceptively simple sometimes, but ultimately there are so many different variations of what has to be reported in the types of forms 1099 that you would use. Today we're really going to be focusing on 1099 MISC payments, but so there are always a lot of questions around how to do this correctly, and it is something that the IRS really has gotten quite good at for auditing and making sure that people are doing this correctly. It really is a foundation of making sure that people are paying their taxes correctly, companies are paying their taxes correctly. So it's a massive focus of the IRS to make sure reporting is done correctly. So what is reportable on a Form 1099? It's in the regulations defined as all fixed or determinable annual or periodic income, which is referred to commonly as FDAP income. Doesn't really mean a whole lot in terms of being kind of intuitive, but most things other than payments for goods, essentially, paid to U.S. persons in the course of a trade or business is potentially subject to 1099 reporting. So keywords here, course of a trade or business. So if you are, for terms of, household purposes, if you're paying, a gardener to come by and mow your lawn every week or so, not subject to 1099 reporting. If you did that in the course of a trade or business, so had a gardener come and mow your office building lawn, that would be subject to 1099 reporting. Examples of reportable income, financial services payments, so dividends, interests, things like that. Those would be reported on a 1099 div, 1099 int. I'm guessing, many of you would get those from your financial institution early in the year. But really, and one of the focuses here today is payments for services provided by vendors. So most of the payments you're going to make to your vendors will have some exclusions here that we'll discuss, but this will generally exclude expense reimbursement. We can talk about that in more detail, but any types of payments for services that your vendors are providing you. Royalties, rents, directors' fees, another big one. Directors are not your employees, so generally their fees are reportable on a Form 1099. Prizes and awards and scholarships and grants. These are kind of general examples of what you would be reporting on a 1099. So what is not subject to 1099 reporting, since that is quite comprehensive, sometimes it's easier to talk about what you wouldn't report. Wages paid to employees, you're going to do your W-2 reporting for those. If you are making payments to employees, you shouldn't also be 1099 reporting them. Payments for goods, as I mentioned earlier, if you're buying, pencils from Staples, not subject to 1099 reporting. Payments made to exempt recipients. So corporations are probably the most common vendor type that wouldn't be subject to 1099 MISC reporting, but also state and local entities, municipalities. We talk all the time about, you've paid your electric bill and you're trying to get a W-9 from all of your vendors and they're refusing. Well, they are exempt recipients. So luckily that wouldn't be subject to information reporting on a 1099. Also payments under the threshold. So thresholds are quite important. By applying these thresholds, if you make payments during the year that do not add up to this total threshold, they are not subject to 1099 reporting, and this could reduce your population. I think one of the major goals of 1099 reporting is reducing the population of payees that you are required to report, because anytime you do report, it's an exercise, administrative exercise you have to go through. And be subject to penalty on everyone that you submit. So reducing that population could be a goal. So non-employee compensation threshold is $600. You'll notice there is a form type on here that's new. It is the 1099 NEC, non-employee compensation. We'll talk about that in a few slides. Dividends and interest, $10 threshold for the year. Pension annuity payments, $10 threshold, and royalties on the 1099 MISC are also a $10 threshold. So when we talk about traditional 1099 MISC payments, generally the threshold is $600, but there are some exceptions, such as royalties, which would be $10. All right, this is another big exception. This went through a number of years ago, but I still get questions about it every year. So payments made using a credit card or P-Card are not subject to 1099 reporting by the payer. They are instead subject to reporting by the credit card company. So IRC Section 6050W requires that credit card providers have an obligation to report merchants who are paid using their cards on Form 99K. 99K and 1099 MISC reporting requirements do not mirror one another. So thresholds are way off. This is a massive gap that the industry has been bringing to the attention of the IRS for years. Perhaps one day will be addressed, but ultimately, if you have employees around town making purchases with P-cards, the IRS understands that you're not necessarily in a position to issue a 1099 at the end of the year. You're not often getting a W-9 from those types of vendors, but the credit card company themselves has gone through a thorough vetting process with that merchant and is in a better position to make sure that the reporting gets done. So if you have employees making purchases with credit cards or P-cards, you do not have to include those payments in your 1099 reporting files. But please be aware, payments made to non-U.S. persons are still the payer's ability to report on Forms 1042-S if required. So kind of a best practice is to require that payments for using P-cards are only made to U.S. persons. The 1042-S or the foreign vendor payments still should go through the vetting process to determine if the payment is U.S. source FDAP income and is subject to 1042-S reporting. And there should be kind of just a checkup made on the statements to those credit cards to make sure that foreign vendors are not being paid using those cards. It's really hard to subject a foreign vendor to withholding if possible or if necessary once the credit card payment has been made. So new for 2020 is this Form 1099 NEC. Not technically new. It was used, I believe, last time in the 80s before it was merged with the 1099 MISC. However, in recent years, there were some legislative changes that required a different reporting timeline for non-employee compensation payments that really threw a lot of people off in the 1099 MISC reporting, and there was a significant amount of fraud that the IRS identified because of the new legislation and kind of the timing of that non-employee compensation reporting. So in an attempt to make this less confusing, the IRS has separated what used to be Box 7 reporting on the 1099 MISC into its own form, a 1099 NEC. So on this Form 1099 NEC, it really is just, the 2020 form really just shows non-employee compensation and withholding associated with that non-employee compensation. There is nothing else on that form. State reporting, of course, recipient data, name, address, TIN. But other than that, just the non-employee compensation box. So This is going to be complicated for 2020 for multi-level marketing companies in the sense that there's the direct sales box that stays on the 1099 MISC, and oftentimes if you're paying distributors, you've got that box checked and you have the box 7 non-employee compensation income. So that's going to be complicated. The IRS is aware of it. We've issued a number of responses to bring it to their attention if they are not aware. But absent doing MLM reporting, you're really just going to move your box 7 non-employee compensation income into this new 1099 NEC form. So the new due date, or the due date for IRS filing for the 1099 NEC, is going to be January 31st. And this is going to go ahead and push back the 1099 MISC IRS filing deadline to February 28th if you're filing on paper, March 31st for e-filing. So that does get a bit easier in terms of, there's only one 1099 MISC deadline now, and all of the January 31st IRS submission moves on to that 1099 NEC. Stay tuned for more information about that. So the 1099 general deadline overview in general, and this has, outside of this NEC enhanced or moved forward deadline in the past few years, Forms 1099 must be filed with recipients by January 31st. You're giving that recipient copy January 31st. You do have time for the recipients to get that copy, take a look at it, say, oh, hey, this isn't the income that I received, or, oh, this is my incorrect TIN, and you would have time to correct that before your IRS filing deadline of February 28th or the e-filing deadline of March 31st. So that's now in place for everything but the NEC. 1099 NEC must be filed with the IRS and the recipient by January 31st. And March 31st. The IRS really has been focused on electronic filing, and they have committed to trying to make this more simple and straightforward for at least initially 1099 MISC issuers in the coming years. So do look for, we do have some electronic filing thresholds we'll be talking about, and look for the IRS to advance those a bit to encourage additional electronic filing. Extensions are available. There's a Form 8809 that can be filed to get a 30-day extension. This is not going to apply to the NEC reporting, but the other types of Forms 1099 would be eligible for the 30-day extension. Every year we hear that the IRS is thinking about making that non-automatic and subject to only being able to receive that if you have some circumstances, but we haven't seen that yet. All right, and here's the electronic filing information. If you are filing more than 250 or more of a particular information return report, you must file the forms electronically. And again, the IRS has spoken a lot about updating this threshold. Financial institutions are also required to file electronically. Partnerships with more than 100 partners are required to file electronically. And there has been an idea tossed around that if you are filing 250 or more of any type of information return report, that you would then have to file all of them electronically. So keep an eye on this. And as I mentioned, the IRS has made some announcements. They are advancing this idea of making electronic filing a lot easier. So now, these days, there's a lot of different types of 1099 reporting tools on the market. There's a lot of different, tools you can access online or download them, and then have your files formatted like filing. However, there is the electronic filing specification tool is a dinosaur, and it's hard for them to adjust it and make changes. And so the filing specifications do change every year, and it does get somewhat complicated. So they are looking at simplifying that over the next several years, so keep an eye on that. You could file a 4419 to obtain a TCC. If you are e-filing for the first time, you'll need a TCC in order to do that. Oftentimes a service provider will have one and they'll use yours to file your information returns electronically. You could file a hardship waiver on Form 88 or 8508 if you were required to file electronically and you couldn't do it. However, as I mentioned, there's a lot of service providers in the market that could do that for you, so hardship waivers are getting more difficult to obtain. And as I mentioned, the e-filing specifications are updated every year in IRS Publication 1220. So if you are building an internal system to submit e-filing, then you should be familiar with, making sure that those specifications updates are reviewed annually and your systems can accommodate the changes. There are some rules about electronic delivery of recipient copies. So legacy rule is you mail everybody using first-class mail a recipient copy of their Form 1099. However, in recent years, this has been, the IRS has allowed electronic delivery of recipient copies. So I can't stress enough how, if you haven't considered this in the past, 2020 is an excellent year to start considering electronic delivery of Forms 1099 recipient statements. I think we've all seen news stories about how the Postal Service is perhaps not as efficient as they were in the past. Things might be slowed down. I think we've learned to expect the unexpected. Will people be at their offices in January, February? Hopefully. We don't really know. So I perhaps in other parts of the country that seems like more of a certainty, but I live in Los Angeles, so I don't really know. So electronic delivery of recipient statements is highly recommended, at least taking a look into these requirements to see if it's something that you can meet. So requirements are specifically in Publication 1179. The recipient has to give their consent electronically. So essentially, like an email goes out, they enter the system, they consent electronically to receive their information returned electronically. If they do not express consent specifically, you do have to issue paper forms. There are some disclosures that are required to be made along with that consent. All of the information that would be required on the paper form must be provided in the electronic version. And there are also substitute form statement requirements in Pub 1179 as well. You do have to post that information by the due date of the paper return, even though the paper filing wouldn't get till, who knows these days, maybe 2 to 3 weeks later. It does have to be posted electronically on the same time. And then you do have to provide the notice that the information has been posted using those, the words on a paper envelope, important tax return document available. So again, I'm pushing hard on the electronic delivery for 2020 information return reports. For more information, see Pub 1179, but it just seems to be a good time to go and explore that. So we just have a 1099 filing example here. ABC Company makes a payment of $300 to Ms. Smith for services performed, as well as a $200 payment for the license to use a software that Ms. Smith developed. What 1099 obligations does ABC Company have? Do they have an obligation to issue a 1099 NEC? The threshold for 1099 NEC reporting is $600, so they would not. What about a 1099 MISC for the royalty portion? Yes, since the royalty portion is the threshold for royalties is $10, and you've made a $200 payment. Could you report the $300 payment for services? Sure, but if it's below the threshold, I wouldn't recommend it. All right, and it looks like we are at our first polling question, so I'm going to turn it over to Dustin for this.
Yeah, so our first polling question for the day is, my company paid an independent consultant $1,000 in compensation, but that same independent consultant also won a scooter for a contest we held in 2020 at our company. Can I report the $1,000 and FMV of the scooter on the 1099 NEC? And the options are A, yes, B, no. And I'm going to give everybody a little bit of time to answer this question. And while we're waiting for answers to come in, just give everybody a quick reminder that if you're having any technical issues with the audio or with the presentation, just keep in mind the audio is going to be coming through your computer. Try refreshing your screen by hitting F5 if these slides are not moving or if you're unable to see our polling question today. I also want to apologize to Jill. I butchered her last name. It's Jill Dymtrow. Looks like we've got about 70% of you.
Justin, not the first time.
Looks like we've got about 75% of everybody answered. I'll give it a few more seconds. Please be sure to enter your answers by selecting an option in the presentation window and hitting the submit button on the right-hand side. About 5 more seconds. All right, back to you guys.
All right, this is a trick question, and I would blame Erin if you're upset about that. So the answer is probably yes, because prizes and awards can be reported as non-employee compensation depending on how they are set up. So if the employee has entered a contest and they're going to sell X number of things and they did it and they won the contest and now they get a scooter, then yeah, you would report that as compensation. They got the scooter as a result of their job performance. So that would be, reportable as non-employee compensation. However, if perhaps you are a retail store and this independent consultant had done some work for you, but also they were the 100th person in line 5 that day and won an award at your cash register, that would be other income, not non-employee compensation. So you're all right. And it depends. Okay, so moving right along, I'm going to turn it over to Erin to talk about some preparation strategies for 1099 reporting.
Thanks so much, Jill. All right, so we're going to get into some things of what can you start doing now to make your 1099 reporting season less painful. Typically we find that summers are a bit slower, and so it's a great time, in this month and next month to try and use that time to really get your data in the place where you're ready to actually report in January. So that's just plugging in all the numbers. So the more prep up front, we find makes the actual reporting process just a little bit easier on everyone. So what's the very first step? The very first step in preparing for all of this 1099 reporting and eventually 1042S reporting when we get to it is, well, not 1042S because you're identifying U.S. persons, but in this case, 1099 reporting, the very first step is identifying those U.S. persons you have paid. So, for 1099 MISC and 1099 NEC, those vendors that you're paying. We find a huge population of independent consultant reporting within our firm. So look at all those independent personal consultants that you have paid throughout the calendar year. And once you have that population, take a look and make sure that, we've received a few questions already. Is there a mixture of payments going to those persons? Did you pay them for services, but you also reimburse them for, flights or, different reimbursements? Make sure they're all for payments that are in scope for reporting. And next, when you have all those persons, more likely than not, you're going to be able to remove some of those people. And this is where 1099 reporting gets a little bit tricky because there are certain people that are out of scope. So corporate entities are out of scope, state and local municipalities, tax-exempt recipients, those are all out of scope. Now, sometimes you can identify them just by their name. You know, you paid ABC Inc., but other times you can't, and that's where there's more of an analysis of your actual data that you have on hand. So, you know, looking at those W-9s. What type of box do they mark on that W-9? You know, if they don't have Inc. in their name, it doesn't mean they're not a corporation. You pull that W-9 and you see they've marked C Corp, well, that's technically out of scope for, let's say, like a non-employee comp situation. They're not subject to reporting. So it's going to be a combination of reviewing the actual names and reviewing the data you have on hand through those W-9s, which hopefully you're collecting W-9s for all of your payment recipients. It's just the best golden source for certain data in terms of name. It also tells you if they're a disregarded entity, because, you know, you need to make sure that you're reporting correctly for disregarded entities. It's going to tell you, you know, are they exempt from reporting? If you can't eyeball that name, it's going to give you the tax ID. So long story short, we always recommend collecting W-9s for payment recipients with respect to 1099 reporting. Your second process of elimination after removing those types of entities that you can remove is look at the threshold. So, and obviously that's kind of a last step elimination, I find. You know, once the numbers are all in there, you know, if you're reporting via software or via a third party, most likely you're providing that data in an Excel format. So once you get those numbers in there, just do a simple sort. You know, sort for anything that's under the threshold, and you can remove those from the withholding population. From the reporting population. Sorry, I keep saying that with the withholding. Step 3, reconcile reverse charges. You know, if I don't see this, you know, a ton, but there are definitely situations where payments are reversed, especially end of year where, you notice something needs to be reversed. You know, you wouldn't want it to accidentally get into your reporting population, and then your vendor gets a 1099 and they're saying, you know, what the heck's going on? You know, this payment was reversed. And then you have to file an amended return, zeroing it out, and you're subject to potential, you know, late filing fees. So just make sure any reverse charges are not included in that reportable population. So moving on, after you've come up with your population, you know, you do want to take a look at that. You know, your federal filing, you know, it's pretty static in terms of we have our set filing dates. You know, it's a much more clear process. State filing is really all over the place. Every state has different filing deadlines. Some states require direct filing, other is in the combined federal state. Some don't even have a filing requirement. So the state and local filings for 1099 purposes can get extremely detailed and confusing. I mean, it's why a lot of people use software, which will automate it, or they use third-party providers, because those people, you know, it's what they do day in and day out. But just be aware, it is not something as easy as every state files on X date, or every state files, you know, directly. Some require physical CDs still. It can get so crazy how they actually have the requirements set up. So just to confirm on the reporting data, things we see most often where there are issues, name. The biggest issue with the name is being careful of DBAs. And this is where the W-9 is so important. I mean, maybe you have like a vendor setup questionnaire, which is great. And within that vendor questionnaire, it asks, are you a disregarded entity? But not everyone does that. And so the W-9 is going to give you that information. So if you're paying, you know, Erin Fennimore LLC, but you get my W-9 and you see, oh, but wait, Erin Fennimore has given me her social security number and she's a single member LLC. Well, that's when you know your 1099 isn't going to completely match up to the actual payment going out, because you need to report my personal name with my social security number referencing my LLC, or it could be a situation, where an LLC is disregarded to a corporation or something like that, so which ultimately isn't reportable. So there's all kinds of things that can happen when you have these tricky DBAs. And then your address, obviously a lot of times just with data manipulation, you drop off a digit on the zip code or something like that. Just make sure your address is clean and clear. Also, when you're going through your file, a lot of times when we're reviewing the data, I'm like, this person's address is in Germany. We should definitely double check that. Or that comes up with the TIN where it starts with a 98. By reviewing your data, it can point out that there are potentially people that aren't subject to 1099s, and maybe it's a 1042-S issue. So just be aware of that and really do a clean scrub of your data. I kind of went over this already, but incorrect addresses in the file. So making sure your zip codes are correct, making sure your state abbreviations. If you have an incomplete address, make sure it is complete, and any returned mail from prior years. Hopefully when you issue your 1099s, more likely than not, you're going to get some returned because of address issues. Not everyone updates you as to a new address. And hopefully when you're receiving those returns, you're reaching out to your vendors. You're either getting a new W-9 with the address, or you're updating your systems with the address that they provided you, orally or via an email. So you're all set for next year. Doing it in real time and updating your static data in real time as it comes in from vendors is just going to set you up in such a great position for reporting time. Now, another issue, if you're receiving B notices, when you send out those 1099s, which is going to be caused when there's a name TIN mismatch. When you get those, there's a very specific procedure that you have to go through for B notices, and by soliciting, making sure you do have a correct name TIN combination, and getting everything corrected so that next year you don't receive your second B notice. So it's just really important to continuously always make sure that your data is clean for reporting. Now, bringing us to this whole concept of TIN matching. So what happens when you send your 1099 to the IRS? They're taking that first name listed on the 1099 and they're matching it with either the Social Security number or the EIN that you're providing. Now, if there is a mismatch, meaning, that EIN doesn't belong to that entity or that Social Security doesn't belong to that individual, they send you what's called a B notice saying, hi, filer, these 1099s have a name TIN mismatch. Now, how do you prevent that from ever happening? It's by TIN matching your 1099 file before you even file it with the IRS, because that means up front you will know, do I have name TIN mismatches? And if you have name TIN mismatches, you clean them up before you ever submit your 1099 filing. It's just your first B notice, kind of like slap on the wrist, do your solicitations, clean up your file. Your second B notice, it's just a real pain. There are certain forms that you have to get, and your vendor actually has to either have it on hand or request it from the IRS, which basically certifies that name TIN matches. And so it's just more of a headache, and you have to institute backup withholding, and that can place customer service relation issues. And so by TIN matching it, and it's a little bit of a challenge internally for people and companies to do it, because individual people have to actually register for that TIN matching system. You have to give some personal financial information, which a lot of people are not comfortable giving, and also the natural in and out of employees moving in and out of companies. So the person who's designated and has gone through everything, they leave the company. So now what do you do? So another option is, if you are using a third-party provider to prepare and help you with these 1099 filings, they most likely are signed up for the TIN matching system. And there's certain software that that's a function within the software where ultimately the company is running it for you, the third party that you're using. But best practice is to TIN match your file before you report, especially if you have a large volume. All right, so using this time to create templates. Before we even go to the template creation, I just want to talk about why I believe it is so important to start all of this preparation early. And because we know we have such a, I think it's a pretty significant change of bifurcating certain payments into the 1099 MISC and the 1099 NEC. Like, this year is more important than ever to utilize that time to prepare. So when you're determining your population this year, you're not only determining, who's in scope, removing people who are out, and that kind of stuff, but you also need to bifurcate your 1099 reporting into your non-employee comp and your other 1099 MISC boxes. So it's going to be more effort up front this year. So use that time now. Create the templates now. You can upload them. You can test them out. You can do so many things. And like I said, test run data, if you are using a third party or a tool, you can import it on a test run and it's going to tell you all those errors. So all the errors we went through with the static data before, address, name, possibly EIN, mismatches, and you have months to clean it up instead of weeks if you start doing this prep in January. All right, I am going to hand it back over to Jill for non-US payee reporting.
Thanks, Erin. All right, I was just typing away to try to answer some of the questions. All right, so 1042S, 1042 overview. Here, you're going to see something similar to the 1099 reporting requirements with one significant difference. Reportable payments made to non-U.S. persons include all U.S. source, fixed determinable annual or periodic income. So U.S. source here being the key. You will not see exclusions for exempt recipients in 1042S reporting. So ultimately, if you do make U.S. source payments of FDAP income to foreign persons, you now have a 1042S reporting requirement. So we do get a lot of questions about, well, we didn't have any withholding because we got a treaty claim and it reduced any withholding to 0%. So do we still have to file the 1042S? The answer is yes. Regardless of whether any withholding was applied to the payment, 1042S is still required to be reported because of new jurisdictional law changes and updated information sharing regimes over the past 2 years. The IRS is taking a bit more seriously its obligation to share information with other governments about the U.S. source income that their residents and citizens are earning. So 1042S reporting is a bigger focus than it has been in prior years. Now, if you issue any forms 1042S, again, regardless of whether withholding was applied, you do have to file a form 1042. That's the tax return that go with the forms 1042S, the information return reports. So anytime you're making these payments, you're going to have to file a form 1042S and a form 1042. So for FDAP payments, what's in scope? Really similar to your 1099 reportable payments. So interest, dividends, royalties, whether paid to third parties or related foreign entities, something that often gets overlooked. Bank deposit interest. For a really long time, bank deposit interest was only reportable to Canadian individuals. Now there's a list that the IRS updates every year. Individuals receiving bank deposit interest from any country that the U.S. has an information sharing agreement with are required to be reported on a Form 1042S. Now, the 1042S reporting for bank deposit interest is the only one that has a threshold. So we talked about thresholds for Forms 1099 reporting being $600 for most types of income, $10 for some of them. Bank deposit interest reported on Forms 1042S does have a $10 threshold, but no other income types required to be reported on a 1042S have a threshold. If you pay $1, you've got to issue a 1042S. Another common type that we see often is board members who are not U.S. persons. So again, board members are not employees. When you do report foreign board members, you will have a 1042-S reporting requirement, but only if that person physically attended meetings in the U.S. If the person is sitting in the middle of a pandemic in their home country and Zooming into the board meetings, that's not considered U.S. source income and would not even be subject to 1042-S reporting. So there is a physical presence required for services provided in the U.S. For foreign independent contractors, any kind of contractors that come to the U.S. to teach or train or provide consulting services are subject to 1042-S reporting as well. More common payments we see: consulting services, legal services, rents or leases of real property. Software and license payments are probably one of our #1 question generators. Those can get complicated. Conference attendance or sponsorship payments, royalty, advertising, and certain types of transportation or courier payments. So payments by truck and train are covered under 1042-S reporting. Transportation paid that is for plane and boat are not covered under 1042-S reporting. Okay, so now we've got another polling question. I'm going to turn it over to Dustin.
Yeah, so the question is, my company paid a Spanish legal firm to perform due diligence on a merger and acquisition deal. I prepared and filed a Form 1042-S, but the Spanish law firm came back to me and told me that I should not have sent this to them. Is this true? A, yes, B, no, or C, depends on location of services performed. I'm going to give everybody just a little bit of time to answer. And while you're waiting, just a reminder, if you'd like to receive CPE credit for today's webcast, you'll need to respond to at least 3 of our 4 polling questions. This is the second of 4, and we have a couple more coming up pretty shortly. All right. About 10 more seconds here. And I am going to pass it back to you guys.
All right, great. We got a lot of right answers here. So it does depend on the location of services performed. Oftentimes, legal services are performed locally. So, it's for due diligence or for some sort of copyright or trademark, patent research locally. So a lot of times we see payments to attorneys being foreign source. They're doing the work from their office in their home country. Make sure that's indicated on the invoice. It is the most important thing to make sure that's indicated on the invoice. But yeah, it all depends on the location of services performed. If they didn't physically enter the U.S., I don't care how many Zoom meetings they attended in your office. If they don't physically come here, then it's foreign source income and it's not subject to reporting or withholding. All right, so sourcing is really important. So 1099 reporting, we don't care about sourcing. All of its worldwide income is reportable on a 1099, but for 1042-S reporting, sourcing is critical. So you're only reporting U.S. source FDAP income, and so knowing the sourcing rules is very important. So as for services, I mentioned before, location of services provided, physical presence is necessary. For royalties, it's where the IP is used. So if you're, paying a royalty for people in, sitting in New York on their computers to use that, if that's U.S. source royalties. Rent is pretty easy, the location of the property. However, sometimes rent can move around if you're renting shipping containers. So that has to be documented, percentage of, where your property that you're renting is located. Interest is always sourced by the domicile of the payer, and dividends are sourced by the domicile of the company. Deadline overview, we have until March 15th to issue forms 1042-S, both IRS and recipient copies, and the form 1042. The IRS does now allow electronic mailing of Forms 1042-S recipient statements. You're going to follow those same requirements in Publication 1179 on www.irs.gov. And they're going to have the same requirements about consent and disclosures and types of things. There is an automatic extension available to extend the IRS or the 1042-S deadline to April 14th. And the 1042 to September 15th. Please keep in mind that there are 2 extensions for the Form 1042-S. You have to request separately an extension for the IRS copy on Form 8809, and there's a letter to send to the IRS to get an extension for the 1042-S recipient copy. Form 7004 is used for the 6-month 1042 extension. And we do hear the same kind of noise about whether or not the IRS will continue to allow automatic 30-day extensions for the Forms 1042-S. So we are keeping an ear out for that. And then I'm turning it over to Erin for tips on preparation strategies for 1042-S reporting.
Thanks, Jill. All right. What can you do to prepare for your 1042-S reporting? So very similar to 1099 strategies I went through. First making sure, is the payment considered FDAP? It's much more narrowly defined for purposes of 1042-S reporting than it is for 1099 reporting, and it's not as broad. A second limitation is the source. So only U.S. source income is reportable, and as Jill went through, unfortunately, the sourcing rules completely vary by the type of payment you're making. So you're going to have to do an analysis here, but it's really important because it is specific to U.S. source. Now, if you have it ticked yes for FDAP, yes for U.S. source, your next step is to look at that form you have on file, because that form you have on file will tell you the withholding that you should have done, or maybe there's no withholding. It's also going to give you all of that static data you need for your 1042-S reporting, which 1042-S reporting has income codes and recipient codes and exemption codes. It's much more detailed compared to 1099 reporting. And obviously, were you obligated to withhold? Now, I hope you are not asking yourself if you should have withheld at the time you were preparing your reporting file. That am I obligated to withhold question should always happen when you are making the payment, before you make the payment. Because if you have to withhold, you withhold directly from that payment. They receive a net amount, not the gross amount, if you have withholding, unless you have a understanding or contractual obligation where you as the paying entity will assume withholding for them, and then that changes the way you report on your 1042-S. Make sure you have this procedure documented. It's the first thing in an audit request. So review forms W-8, I went through, just a little bit. The W-8 is going to tell you what amount you should withhold. At the very baseline of this, it's 30% withholding, unless that W-8 tells you you don't have to withhold, which would be via a treaty or which would be via an IRS statute. What if you don't have that W-8 and it is U.S. source and FDAP? You should be withholding 30%. Luckily, the W-8s are retroactive, so it's March, you realize you didn't withhold and you should have. You can receive the W-8 that hopefully supports no withholding, and you can make it retroactive with an affidavit. All right, we have another polling question.
Yeah, so the question is, my company made a software license payment to a German entity for software used at our headquarters in Texas in 2020. We have not made a payment to this company since 2016, but we did collect a W-8BENE in 2016. Has a treaty claim on it and was properly signed and dated in October of 2016. Do I have to collect a new W-8? And the options are A, yes, B, no. And of course, we'll give the audience some time to answer the question. And for those of you who would like a copy of today's slide deck, you can download that from the folder that says slide deck and handouts to the right of the slide view. We'll also be sending the slides in an email after the webcast along with a recording. So I'm going to give about 10 more seconds. All right, and I will hand it back over.
All right. So the answer is yes, you do. So if you have a W-8 that was collected in 2016, presumably, let's just say it was signed also in 2016, these W-8s expire every 3 calendar years. That means that it expired on 12/31/2019. So if you're making the payment in 2020, technically you don't have a W-8 on file because the W-8 expired. So always make sure if your vendors, if your relationships with foreign vendors, continue for 10, 20 years, every 3 years you need to get a new W-8 from that foreign vendor if you're making U.S. source payments. All right, the withholding. Withholding is extremely complicated because it can vary by treaty. Treaties all have different agreements with the U.S. So, Germany, United Kingdom, Japan, potentially all different treaty withholding rates based on the type of income you are paying. So business profits compared to interest, compared to dividends, all different sections within that treaty and potentially different withholding rates. So it's really important that you document with the W-8 and you actually analyze that W-8. Also, a bunch of treaties got ratified last year, and so like Japan is a perfect example. There's a different threshold which can get you to 0% for certain dividends now. So really important to always be up to date on those treaties and also the claims on the W-8. And I realize we only have about 4 more minutes, and I know I am going quite quickly to get through these slides. Please send questions. Even if we don't get to the questions today, we will get you responses on all questions sent. So like I said, on the 1042S, it's so complicated because they have all these codes: payer recipient, payee recipient, intermediary codes, income codes, and exemption codes. And the IRS loves to make this even more complicated because they constantly refresh these. And guess what? 2020 is a year where they have once again refreshed them. And for 2018 and 2019, they made it a little bit easier on us. They just added new codes. They changed the codes around this year. So, it's not like there's just new ones. Within that huge listing, which is found at the end of the 1042S instructions, they kind of mixed them up. Government is a perfect example. If you have non-U.S. governments you're making payments to, they completely redid the coding for that. So just make sure you are always refreshing and making sure that there's no code changes. All right, we have a filing example. XYZ company makes a payment to a non-U.S. independent contractor who only performs services for that U.S. company in Ireland. The independent contractor never comes to the U.S. This is a perfect example of foreign source. You don't have a filing obligation. You don't have a withholding obligation. You do need to confirm and just have on hand that all services were provided outside the U.S., and I highly suggest putting that on the invoice. Put that onus on the vendor to put the location. Now we're going to change the facts a little bit and say that that independent contractor, well, they came to the U.S. for 1 week, but he does all his other work in Ireland. So technically, you do have a 1042S filing requirement, but only for that week-long training in the U.S. So make sure that invoice from that contractor bifurcates out exactly how much he was charging you for the U.S. presence. And that's what you would report, and that's what you would potentially withhold on if he didn't provide you the 8233 that he needs to. All right, our last polling question with 2 minutes to go.
Right down the wire. So the question is, if you do not have an obligation to withhold on a payment of U.S. source income paid to a non-U.S. person, you do not need to file a 1042S and 1042. Is this correct? A is correct. B is incorrect. Now give some time to let everybody answer. And once you've completed all the CPE requirements from today's presentation, you'll be able to download a PDF of your CPE certificate from the CPE progress window to the right of the slide view. All right. Get those answers in. About 10 seconds here. All right. I'm going to hand it back over.
All right. So if you have made a payment of U.S. source income and you don't have any withholding, you still have to file a 1042-S. It's not the withholding that triggers your 1042-S reporting. It's the fact that you made a payment of U.S. source income. So make sure, even if you're not withholding, and you don't have to, if you're making payments of U.S. source income, you are filing 1042-S's and 1042s. Now, again, just like with 1099, use this time, especially for 1042-S payments. Get your templates ready, get all the codes, the payments, look at your population, make sure you withheld correctly, you have documentation on file. This file, more than anything, is so detail-oriented. Make sure you have it set up and you can either review it in-house or you're working with a third party to review all of your withholding and reporting obligations. And do a test run. This is where software really comes in handy to tell you, hey, there's a red flag in your data. If it's good software, it will definitely flag that for you. And then penalties, really quickly with Jill, back to you.
Yep, this is the most important slide about penalties. These go up every year. We've got to make sure you're avoiding the intentional disregard. So this is what happens. Per occurrence means per information return report filed or failed to file, failed to be filed. So make sure you're avoiding these. And we are past our time limit. So I'm sure you can get the slides will be distributed. I'm going to turn it back over to Dustin. And we have been doing the quick fire challenge, answering as many questions as possible. When we're not speaking, we've gotten about 150. So if you haven't gotten an answer to your question, we're going to be working on those still. So Dustin, back to you.
All right. Thank you, Erin and Jill, for a great presentation today. As a reminder, if you attended today's presentation in a group and you'd like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts window to the right of the slide view. If you participated as an individual and met all the certification requirements, your certificate is available to download now in the CPE progress window to the right of the slide view. I'll keep the webcast console open for a few minutes to give you time to download the certificates. A copy of your certificate will be emailed within 3 weeks should you have any difficulty downloading it now. And I am going to push our survey up here. So the link to the online survey where you can provide us some feedback for today's presentation. Please take a moment to complete this survey as your feedback is extremely important to us. And thank you again for joining us, everyone, and we'll hope you join us again next time.